All right, so today we're gonna set sail, I guess you could say, into the world of shipping investments. And we're not just talking about, the ships themselves, but how people have made some serious money investing in this industry.
Yeah, it's a fascinating area.
Mm.
Most people think of shipping as just this logistical giant, but there are some real opportunities for investors who can kind of figure out how it all works.
Right, exactly. And that's what we're going to do today. We're going deep on a report from the platform. It's called Spotlight on the Great Investment Stories in Shipping. So the goal here is to see how these master investors have managed to navigate this very volatile market and come out on top.
Yeah, and a key to that is understanding things like the Baltic Dry Index, which is kind of like the Dow Jones for shipping. It tracks the cost of moving raw materials like coal and grain around the world.
Okay, so if the index is up, that means shipping costs are higher,
Right.
which usually means higher profits for shipping companies, right?
Exactly, and the report highlights how much this index has swung between, say, 2019 and 2024. Like in 2021, the Baltic Dry Index more than doubled from where it was in 2019, but then it dipped again in the years after that. So if you could buy low when everyone else is panicking
Yeah.
and then sell high when demand came back, well, you can see how there's potential for big profits.
Wow, yeah, that's like riding on a wave, but it does sound like a bit of a roller coaster. How do these investors know when to get on and off that ride?
Well, they don't have a crystal ball, but they do understand the factors that drive these cycles. Things like global trade, economic growth, even geopolitics plays a huge role.
Right, okay, so let's talk about some specifics here. The report starts off with this great story about Oak Tree Capital Management. They invested in this company called Torms, which is a Danish company specializing in product tankers. And they ended up making 5 times their money back on that investment. So what was their secret?
Well, it wasn't really one secret, more like a combination of smart analysis and good timing. Remember, I mentioned geopolitics. But when the war in Ukraine started, it really shook up the global energy markets, and that caused tanker rates to spike.
Oh, so Oak Tree just got lucky with the timing then.
Well, timing was definitely a factor, but it wasn't just luck. They saw the potential for disruption and Eladu. They knew that Torm was in a good position to benefit from it. You see, Torm had been modernizing their fleet, replacing older ships with more fuel-efficient ones.
So they were already kind of ahead of the curve when this crisis hit, and then they could really capitalize on that increased demand and the higher rates that came with it. Did they have some sort of special insight that led them to Torm?
It's hard to know exactly what their thought process was, but they probably had a whole team of analysts who really understood not just the shipping industry, but also the broader geopolitical landscape. Because knowledge is power in this game, right?
Makes sense. But here's where it gets interesting. The report actually suggests that now might be a good time to look at the tanker market again.
That's because rates have come down recently, partly due to, you guess it, more geopolitical uncertainty.
So is history repeating itself? Is this another dip that investors can take advantage of?
It's a good question to think about.
Okay, let's move on to another big name in shipping, John Frederickson, who's sometimes called the king of tankers.
Yeah, he's a legend. His investment in Frontline, which is a major crude oil tanker operator, earned him a 3.5 times return on his investment.
Okay, not quite as dramatic as Oak Tree's play with Torm, but still impressive. What was different about his approach?
Well, Frederickson has a history of playing these market cycles. He's known for buying assets when they're undervalued, and then waiting patiently for the market to swing back in his favor.
So it's about timing, but also patience.
Exactly. He's also really good at spotting value where others don't see it. Like Frontline bought up a lot of secondhand vessels at really low prices, which turned out to be a great move when tanker rates went up.
So he's a bit of a contrarian then, going against the grain and betting on things that other people might overlook.
You could say that. He's not afraid to go against popular opinion if he thinks the fundamentals are sound. But he also understands the impact of global events. Like when sanctions were imposed on Russian oil, it completely changed the flow of crude oil around the world. And guess who was in a perfect position to profit from that?
Frontline.
Right.
So again, it's a mix of understanding the market, anticipating those global trends, and having the guts to make big moves when the time is right.
You got it.
But wait, there's more. Fredrickson didn't stop there. He also invested heavily in Golden Ocean Group, which is a big player in dry bulk shipping. And he got another amazing return, 4.6 times his initial investment. This guy's on a roll.
Well, he understands the importance of diversification. He doesn't want to put all his eggs in one basket. Golden Ocean focuses on transporting things like iron ore and coal, which are really important for industrial growth,
Okay.
especially in places like China and India.
So he's betting on the continued growth of those economies then, and the demand for raw materials that comes with that.
That's part of it. But Golden Ocean also upgraded their fleet. They got rid of those older, less fuel-efficient ships and invested in modern ones that can transport goods more efficiently.
Right, efficiency leads to higher profits. But what about the pandemic? Didn't that disrupt global trade pretty badly?
Absolutely. But as the world started to recover from the pandemic, we saw a big rebound in trade activity, and that's when the demand for dry bulk shipping really surged, and Golden Ocean was ready for it.
And wouldn't you know it? The report hints that now might be a good time to consider dry bulk investments. It seems like every time there's a dip, there's an opportunity.
Well, that's just the nature of shipping. It's a cyclical business. Freight rates and asset values are down right now, which could be a signal for investors who are looking to buy low.
Okay, I'm starting to see a pattern here.
And that pattern is the key to understanding how these shipping magnates have made their fortunes.
Okay, so for our final case study, we're going to look at a real wild ride. We're talking about container ships now with the Custas family and their company Danios. And get this, they got a 14 times return on their investment.
Yeah, that one really shows just how much potential there is in the shipping industry. So remember back during the pandemic when e-commerce just exploded?
Oh yeah, everyone's stuck at home, online shopping went crazy.
Right, and all that online buying meant huge demand for container ships. And Danios, they'd lease out those container ships, so they were in a perfect spot to benefit.
Okay, but 14 times their investment? That's almost hard to believe. How did they pull that off?
Well, they made some really savvy moves. First, they locked in these long-term contracts at super high prices, right when demand was at its peak. So even when the market started fluctuating, they had this guaranteed income stream.
Smart. They basically locked in those profits at the perfect moment. What else did they do?
They took advantage of those high valuations to refinance their debt, so they could get even more capital and expand their fleet.
Wow, so they really leveraged the situation to their advantage?
They did, and the numbers show it. At one point, charter rates,
Hmm.
the fees for leasing those container ships, they went up 7 times.
Whoa, imagine the profits on that. But the report also mentioned something about U.S. tariffs impacting asset values. Did that mess things up?
It definitely created some uncertainty. The idea of trade wars and tariffs made some investors nervous, and that could push those asset values down.
So was that a missed opportunity or a new one?
That's the big question. For some people, it was a warning sign, a reason to pull back. But for others, it was a chance to buy those assets at a discount, hoping that the market would rebound eventually.
So every twist and turn in this industry seems to bring both risks and opportunities. You got to have nerves of steel to really succeed in this market.
Yeah, it takes a certain kind of person. The ones who do well aren't just riding the waves, they're anticipating them, understanding what's driving them, and making smart decisions even when things get rough.
Okay, so we've talked about tankers, dry bulk container ships. What are the key takeaways for our listeners? What can they learn from these shipping giants?
I'd say the biggest thing is understanding that timing is crucial. You got to know the cycles of this business, the booms and busts, because those ups and downs, that's where the real opportunities are. Whether it's predicting a surge in demand or spotting a dip in the market, timing is everything.
So it's not about luck, it's about understanding those trends.
Right.
What else?
Knowing how to use financing and leverage is really important too. Like we saw with Danios, they used those good market conditions to refinance their debt and get more capital for growth. Smart financing can really boost your returns and help you weather any storms that come along.
So it's not just about having money, it's about knowing how to use it.
Exactly. And don't forget about diversification. John Frederickson did well with both tankers and dry bulk. That shows how important it is to spread your risk around. Don't put all your eggs in one basket. Look at different parts of the shipping market. Invest in assets that'll do well even in different economic conditions.
Makes sense. Spreading the risk can help protect you from those unexpected downturns. Anything else?
Yeah, investing in modern fuel-efficient assets is a smart strategy. We saw how Torm and Golden Ocean benefited from updating their fleets. In a world that's more and more focused on sustainability and efficiency, investing in ships that are green and cost-effective can give you a real advantage.
So it seems like all these successful investors have something in common. They're always looking ahead, anticipating those big shifts, and then getting themselves into position to take advantage. It's like they're playing chess, always thinking a few moves ahead.
That's a great way to put it.
Yeah.
They're constantly analyzing the global situation, looking for those little clues that other people miss, connecting the dots, and making calculated bets based on their deep knowledge of the industry
Yeah.
and how it's all connected to the global economy.
So it sounds like we're seeing another dip in the cycle now. With all this talk about opportunities and tankers and dry bulk, is this like the perfect time to jump into shipping investments? Are we heading for Treasure Island?
Well, there are definitely some signs that point to some good opportunities.
Hmm.
Like the report mentions all this geopolitical uncertainty and the possibility of trade wars. Plus, the market just naturally goes up and down. And all of that together has pushed down asset values in certain sectors.
Okay, but for someone who's not already, a shipping tycoon, what's the most important thing to keep in mind?
I think the biggest takeaway is that shipping is a complex business. It takes careful planning and a long-term view. It's not a way to get rich quick. All those investors we talked about, Oaktree Frederickson, the Gustas family, they all succeeded because they really understood the basics. They did their research and made smart decisions based on solid analysis.
So don't just dive in head first. You got to chart a course, know where the storms might be, and have a plan to get through them.
Exactly. And remember, this industry is all about volatility. The people who can see those changes coming and adapt to them, those are the ones who are going to make it.
So you're saying volatility isn't something to be scared of. It's more like a force you can use to your advantage.
Exactly. It's like a strong current. It can sweep you away if you're not careful. But if you know how to ride it, it can take you far.
That's a great way to put it. Well, there you have it, folks, a deep dive into the world of shipping investments. We've seen how some really smart investors turned volatility into profit by knowing the market, making strategic moves, and having the patience to stick to their plans.
It's a really interesting industry with a long history and a bright future. And as we've seen, it offers the potential for big returns for those who are willing to put in the work and embrace the challenge.
If you're feeling inspired to explore shipping investments yourself, I highly recommend checking out the platform. They have a ton of resources to help you understand this exciting industry.
And remember, with any investment, knowledge is power. The more you know about what's going on, the better decisions you'll make and the more success you'll have.
Until next time, happy sailing, everyone.